Good morning. Thanks for starting your day with the Farm and Ranch News. Congress and USDA are butting heads over the 2022 Emergency Relief Program. Members from both parties sent letters to USDA questioning the payment methodology in the ERP program that skews payments to provide a higher percentage of aid for smaller losses. The Senate GOP Ag Committee said that farmers with losses larger than $30,000 see their payments go down due to USDA's payment factor. I asked FSA Administrator Zach Duchesneau about that concern that in this program, producers with the largest losses receive the least amount of aid.
The presumption is that those with the largest losses also have had some time to amass some resources that can help them weather these things. It's not as simple as that's an expense and we've got to mitigate it. We've got to be thinking about what the long-term impacts are. We see this as an investment in those 200,000 producers that are going to receive ERP benefits.
The biggest factor in profitability in agriculture is definitely the weather. As we transition to an El Nino weather pattern, we're all very curious what the moisture will do going forward. Meteorologist Brian Bledsoe told me from the models he's examined, there's reason to be optimistic about the weather outlook for 2024.
If you look at historically what El Nino has provided for the northern plains, it's usually an average to slightly below average in terms of moisture and also warmer than average in terms of temperature. I still think average to below average moisture for the majority of the state is the way to go for the winter. I do think that changes in the spring though. It can turn on a dime, and I think that that's what it'll do this spring.
Well, thanks for joining us this morning. We'll be back in a bit to check on the markets.
We asked Montana farmer Walt Sales about the challenges of mental health in agriculture.
Another drought, there always is. There's always going to be another something. I grew up in a generation of you pulled yourself up by your bootstraps, but it's become evident is what do you do if you can't even find those bootstraps? If you need to talk to somebody, go to beyondtheweather.com for free counseling for Montana ag producers.
Welcome back to the Ag Report. The cyclical tightening in U.S. beef production is expected to continue, with CattleFax projecting 2 more years of herd contraction. They're estimating the U.S. beef cow herd down another 2% or 600,000 head in the January report. The reduced cattle supply will allow cow-calf producers to gain more market leverage the next 2 years, but feeders and packers will see their margins squeezed. CattleFax is calling the average price of 5.5 weight steer calves in 2023 at $2.62. That's up 33% from last year. Average prices for 2024 expected another 10% higher at $2.90. Well, cattle futures managed to finish higher for a third straight day. Traders are looking to the Cattle on Feed report now, where placements are expected lower but total inventory expected higher. Cash-fed cattle were down another $4 to $5 last week, with live trade averaging $170 and dress sales at $269.5. Some strong results from fall bull sales. Sitz Angus averaged $98.24 on 438 bulls, with a top lot at $50,000. Goggler Angus near Judith Gap averaged $78.54, up 34% from last year. At the Newell Sheepyards, yearling replacement ewes sold from $235 to $260 a head, 3 to 5-year-olds $170 to $215. And the wheat market quickly bounced back from Monday's steep drops with double-digit gains. Significant sales of U.S. wheat to China recently, and USDA tightening its estimate of U.S. ending wheat stocks is putting a little bit of wind back in the sails of the wheat market. Well, that's going to do it for today's report. Thanks for joining us and have a good one.